we're going to now turn our attention to tax rate. Hold on a second, I want to make sure I'm not missing anything. Okay, so like I said, we've got lots of acronyms, and we've got two different types of taxes that we're talking about here. We'll try to kind of organize them a little bit. Those acronyms, FICA, SECA, we talked about that. FICA is the act that was passed that implemented Social Security and Medicare. So Federal Insurance Contributions Act. That's what that stands for. So FICA, Federal Insurance Contributions Act. And within FICA, we have two different types of insurance. One is OASDI. This is old age, survivors, and disability insurance. Otherwise known as Social Security. And then we also have Medicare. Now, your book abbreviates Medicare. They call it hospital insurance. But it's more than that, right? It's more, it covers, and that's what they're calling here. So HI, it's more than that. Because it covers more than just hospital. It covers doctors' visits and all of that kind of stuff as well. Look at this. There we go. So FICA, Federal Insurance Contributions Act, consists of these two insurances, OASDI, otherwise known as Social Security, and Medicare tax. Then we also have SECA, which is Self-Employment Contributions Act. So SECA also consists of the same two. Okay? OASDI, whoops. Or Social Security. I'm going to abbreviate. You're going to see me abbreviate a lot because that's a lot to write out. I'm not going to write it out every time. And Medicare. I abbreviated MC. If you see HI, what it means is Medicare. Okay? MC. So that's what these two, now they're separate acts, but they consist of the same taxes. It's just that one is for employees and employers. Sorry for those of you on the left side that can't see this. My left side, your right side. And then this is for independent contractors. Also partners in partnerships. We'll add that in there. Anybody who is considered to be self-employed is subject to SECA tax. Anybody who's considered to be an employee or an employer is subject to FICA tax. Again, same taxes, same tax rates as well, sort of. And I'll show you why I mean sort of. So, does anybody want to take a picture of this? Because I'm going to erase it in just a second here. I think I've got, let me look at I've got whiteboard images up here. I can't remember what I've got. Oh, I've also got this. This is, no, I guess I don't have a link. Well, I know there's links up above to whiteboard images. I'm going to we'll go through this. This is going to be helpful to you, by the way, when you're doing some of your problems. I've got steps here for calculating. I'm not going to go through that right now, though, because we're not quite to that level. All right. So those are our types of taxes. Let's talk about the rates for them. Got it listed up here, but I kind of want to put it in a table format. Let me see. Is this an example? Yeah. We're not going to get to that yet. I want to get it into a table format. So for OASDI, remember that's Social Security. So OASDI, otherwise known as Social Security. And I'll put Medicare down here. We have an employee portion. That's the amount that the employee pays, the amount that's withheld from their paycheck. And we have an employer portion. That amount is paid separately, and a lot of employees are not aware that their employer is paying an equal amount of tax on their behalf. So when you look at your paycheck, and do look at your paycheck next time you see it, and notice it may say Social Security and Medicare, it may say OASDI, it may say FICA. FICA would be both of them combined, but you'll see it shouldn't be combined. It should be two separate listings. Look at the amounts on those paychecks and know that your employer is paying the same amount. They've withheld this amount from your paycheck, but they're also going to have to pay an equal amount themselves. So we've got an employee and employer amount. For OASDI, the amount is 6.2%, which means the employer is also paying 6.2%. The total is 12.4%. So if you made $100,000, the employee has to pay $6,200 in Social Security tax. The employer is also paying $6,200 in Social Security tax, for a total of $12,400 in Social Security tax. That's going into under your Social Security number. It's being credited to your account. Doesn't mean you're going to get $12,400 out of it, but it's being credited toward your account, and that then is part of the calculation to determine what your benefits are when you receive benefits. Medicare tax, or HI, the percentage is 1.45%. Again, 1.45%. For a total of 2.9%. So the total Social Security and Medicare tax that is being paid, and it starts at the first dollar. You make $1, those taxes apply, is 15.3%. Also, so for SECA taxes, for independent contractors, individuals who are self-employed, they are considered to be both the employee and the employer. So guess what they get to do? They get to pay both. So for self-employed individuals, so we can say the total, also self-employed, they're going to pay the full 15.3%. So this comes to 7.65%. 15.3, yep. So the tax rate doesn't change, but if you're self-employed, you've got to pay both halves, because you are both the employee and the employer. It's a great privilege. It's so great a privilege that they double your tax. So you can see why it may be a motivation for employers to classify individuals as contractors as opposed to employees. Because if they're employees, the employer is going to have to pay this. If they're independent contractors, they don't have to pay any of it. It's all on the self-employed individual, right? So that's why there's a motivation for them to misclassify employees. And that's why there are very stiff penalties for doing so as well. Now, one of the things as well that I want to mention real quick, because I've got you for one more minute, this talks about a wage base of $168,600. What that means, and I'm going to put that in parentheses here. Medicare, oh, I put this too close. Hold on. Unlimited is what I want to say. What that means is that this tax only applies to the first $168,600 that an individual earns in a calendar year. So if you earn $168,601, you're going to pay your Social Security tax on $168,600, but that $1 you're not going to pay Social Security tax on. That's a big tax savings. It should motivate you to get above that wage base. Unfortunately, this wage base increases every year. That's for 2024. 2025 was, let me see. Well, there's 2026, what it's going to be, $183,600. This is just kind of an FYI. It's $176,100 in 2025. So they keep moving the goalposts. If your motivation is, I want to get to that wage base, which is a good motivation to have, just know that you're going to have to keep striving a little bit harder every single year. But for Medicare tax, it's unlimited. If you make $1 million, all of it's subject to Medicare tax. If it's earned income, if it's within that wage base for Medicare tax, right? If it's earned income, so it's got to be the right kind of income, and it was for the right kind of wages. So it wasn't exempt. $1 million, $10 million, whatever. All right. Any questions? We will pick up with some examples on Thursday and some calculations on how to do this. All right.